A pretty busy morning. Kevin Green joins us as we look at some of the technicals for the session ahead of us. KG, right now S&P down 60.71, given some of yesterday's back a bit.
Yeah, seeing a little bit of a pullback here, but obviously it's still early in the market. I think the big question is going to be the mega cap names. Obviously, that was a driving force yesterday, but this morning you're seeing a little bit of weakness. Google's not getting that much of enthusiasm like we saw yesterday. Apple selling off here a little bit, but we still have a lot of time left to go in the session. Now, when we're kind of looking at the levels for this morning, 60.60 is going to be that negative area. You'd like to see some buyers kind of stepping in. We do have some put positioning sitting right there, and they have the immediate intermediate area of resistance, 6,100. Not surprising. We've been talking about it for very long time. If we are able to kind of break out, Oliver, I would say 61.25 could be that positive gamma area for this morning, for today, and we just need to get a little bit more, once again, enthusiasm when it comes to the mega cap names. And if we do see a breakdown, kind of look at that 60.40 to 60.30 area, that channel that we have in blue, to be retested here again. You'd like to see some buyers really stepping in at 60.60, but if not, that would kind of be that line in the sand before we have any type of dramatic sell-off here. And I think the only thing that's left on the calendar today that could be cause a little bit of volatility could be the 30-year Treasury auction. Now, the 10-year Treasury auction yesterday was actually pretty good, but yields continue to rise. Will we see the same type of performance when it comes to the 30-year, and will that put a little bit of pressure in the equity market once that auction takes place?
It was interesting, and I know you got a chart of the 30-year, so maybe we go there next, because the fade through a strong auction yesterday I thought was kind of interesting. The fade just generally after CPI, also kind of interesting. We're doing the same thing again today, and all of that with the odds of the cut solidifying in, next week at like near 100%. So it's a pretty interesting situation with bonds.
It is. When you're seeing the fade with treasuries this morning, it's obviously because of the PPI print came in a little bit hotter, and I think that's going to put into question what PCE is going to be, because PPI and CPI have around 65 to 70% of the components for PCE. But this is a 30-year treasury chart. This is actually showing the bond itself. So as these prices go up, yields go lower. As those prices go down, yields go higher. What you actually do notice here, this is from 1996. What's actually very interesting here, we actually have a longer-term trend line that was established basically in 97, and we had another low that hit for the most part in around 2000. So if you actually extended that out, we respected it. And now you're actually seeing this bear flag pattern taking place, meaning that the market itself, or the trend line, primary trend line over the last couple of years, has been bearish. We have seen bond prices, for the most part, move to the downside, yields moving to the upside here, but that level actually has held. And so now we're trying to kind of flag up here. And you can make a case, Oliver, that cross between the 12 and 26 EMA, when you're looking at the monthly chart, has crossed in a bullish formation, also kind of in this bullish pattern. And you also have RSI making higher lows for the most part. Now, once again, this is a longer-term time frame. This is not something that's going to develop over the next month or 2 months, but it does give us a little bit of perspective as to how far can bonds go from here when you're looking at the 30-year, and then what's the upside potential. And if you're looking at this and you're a technician, you say, yep, there's probably more upside potential than downside risk when it comes to the 30-year treasuries, and that might be an area where a lot of institutions next year might be looking to put some capital to work.
All right. It's a good long-term chart. I like the perspective, taking it way back. Always fun to kind of zoom out and get those long-term perspectives on where we might see a little resistance and support. Thank you, Kevin Green. Appreciate that.